If you're thinking about using an SBA loan to buy a business, you probably have a ton of questions and probably a few concerns. And that's totally normal. These loans are powerful tools for building wealth, but like any financial decision, you need to understand what you're going to sign up for. I'm Ben Kelly. I've used multiple SBA loans to acquire multiple businesses, and I've helped hundreds of students navigate this process successfully. Today, I'm going to tell you everything you need to know that the banks are not going to tell you upfront. The personal guarantees, the collateral requirements, what happens in different scenarios, and most importantly, why SBA loans might not even be your best option. By the end of this video, you'll have complete clarity on how these loans actually work, and I promise you're going to feel much more confident in making the right decision for your financial future. Let me start with the scariest part. Yes, you're going to personally guarantee the loan. This means that if the business fails, you're going to be on the hook for the full amount. If you buy a business for $1 million with an SBA loan and it happens to go under, you owe that money. The bank can come after your personal assets, like your house, your car, your 401k account. This is not meant to scare you. It's meant to make you understand the stakes. But here's what they don't tell you. Businesses that are acquired through the SBA process have a 95% success rate after 5 years of ownership. That's not my number. That's the SBA's own data that you can look up. Compare that to startups who have a 95% failure rate within 5 years. You're buying something proven, not gambling on something new. The bank is going to do their own due diligence too. They won't fund a bad deal. If the SBA approves your loan, they've essentially validated the business. Now, we still do our own due diligence, we still do our own quality of earnings, but it should give you extra confidence knowing that the financial institution that's going to give you $1 million for the deal also put their stamp of approval on it. They're betting their money that you're going to succeed. Look, I need to be real with you about the worst case real world scenarios. If the business fails and you can't make the payments, here's what happens. First, the bank is going to try to work with you. They don't want to foreclose on your business. The bank is not in the business of running businesses. They want you to run the business. They want to be a bank. They might restructure the loan, extend the terms, or reduce the payments temporarily to help you get back on your feet. If that doesn't work and everything just hits the floor, they're going to liquidate the business assets first. After doing that, whatever is remaining, then they're going to come to you. But most lenders are going to negotiate a settlement. They rather have 50 cents on the dollar than spend years in court trying to get the last cent of their money. I've seen people settle $500,000 loans for $150,000. Yes, your credit is going to take a hit, expected to drop 100, 200 points. Recovery is going to take about 2 to 3 years if you have a good strategy and you handle it right. You can still buy a house with an FHA loan after 2 years. Conventional mortgages will be available about 4 years, typically after an event like that. It's going to suck for a bit, but it's a setback that you can recover from. Everyone freaks out about collateral, but let me explain how it actually works. For loans under $500,000, the SBA typically doesn't require your home as collateral. They're going to take a lien on the business assets first. This is going to be equipment. This is going to be accounts receivable. It's going to be any available inventory. And for larger loans, yes, they're going to want additional collateral, which is going to come in the form of your home, your cars, your 401k accounts. But here's what most people don't understand. They rarely foreclose on people's personal homes. The PR nightmare of kicking people out of their homes rarely is worth it for them. They much rather work out a payment plan that you can pay or settlement that can finish the matter. If you don't have home equity, they can't take what doesn't exist. Renters actually have an advantage here. They have no home to lose. The business itself is typically the primary collateral. If it's generating cash flow, that's what they're going to care about most. You need a 650 plus credit score for most SBA loans. I've seen people get approved for SBA loans with credit scores as low as 600. If you have assets or you have a strong co-signer, someone who's going to personally guarantee the loan along with you, exceptions are definitely made. The business's finances matter more than yours. Banks are going to care more about cash flow than they do about credit scores. A business that's doing $500,000 in profit can overcome a 620 credit score. Your credit gets pulled once during the application process. That's about a 5 to 10 point hit. Making the loan payments on time actually is going to improve your credit. I've seen people's credit scores go up 50 to 100 points after a year of payments. Business credit gets established separately from personal credit. This actually helps your personal credit profile long term. You need at least $20,000 in liquid capital to show the bank. They're going to want to see 3 years of tax returns. If you've been very creative with tax returns, now is the time to come clean. You need relatable work experience, but it does not have to be direct work experience in the industry that you're acquiring. I bought an accounting firm without being an accountant. You need transferable skills: management, sales, marketing, operations. The down payment's typically going to be 10%, not 20 to 30% like real estate. On $500,000 purchases, that's $50,000 down. Compare that to a $500,000 house that requires $100,000 down. The loan process is going to take anywhere between 60 to 90 days. It's not going to be fast. Plan for extensive document requests back and forth with the bank, asking every question known to man. They're going to want to see everything: bank statements, retirement accounts, accounts, your Venmo. Here's what most people don't realize. You don't always need an SBA 7A loan. Seller financing can be better in many situations. Sellers often finance between 10 and 50% of the deal. No credit check, no lengthy SBA approval process. Interest rates can be lower, sometimes 0%, depending on what you negotiate between you, the buyer, and the seller. I have a student, Brian, who bought a business for $125,000. He got $25K in seller financing with 0 payments for 2 years. He's now making over 100 grand annually from that business. Private investors are another option. You want to find someone who has money to invest, but very little time to do it themselves. They put up the capital, you run the business. Split the equity however you want. Creative deal structures can eliminate loans entirely. Consulting agreements, earnouts, performance-based payments. One student bought a $4 million agency with 0 down because of the way he structured his seller notes. The key is knowing when to use which strategy. I actually have a video explaining this entire process, everything you need to know about seller financing, and if it makes sense to go watch it, it's gonna be linked somewhere around this video. Look, SBA loans are not as scary as you think, but they are not a joke either. You're taking on real risk, real responsibility, and yes, real potential consequences if things go south. But you're also gaining access to an incredible opportunity. It's the chance to own a cash flowing business that can transform your family's financial future. If you want to learn exactly how to structure these deals, whether you're using SBA loans, seller financing, or creative strategies, I have something for you. I have a program called Acquisition Ace, where we don't just teach you how to find funding, but also how to find the right businesses, how to structure those deals properly, and make sure you're buying an asset, not a liability. We've helped hundreds of students navigate this process, many who started out just as nervous as you might be feeling right now. If you want to learn more about how we can help you acquire your first business safely and strategically, check out the link in the description. Thanks for watching.